Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein with your end of the day financial update for this Tuesday, the 22nd of August, 2017. All right, my friends, all it took was Paul Ryan in part saying that the party, the Republican Party, is unified behind tax cuts. It took Mitch McConnell to say in the Senate that there will not be an issue with debt ceiling. And the market looked at that with a sigh of relief and moved to the upside. It didn't hurt to see that North Korea hasn't kicked up the rhetoric, and that our Secretary of State Tillerson today did say, you know, he's happy to see that maybe a dialogue can begin at some point. So these were all the positives. It also didn't hurt that the market was oversold when this all occurred on a light volume day, and the market had no problem marching back up to some very interesting levels that I'm going to show you now. So let's go to the Nasdaq and get a feel for where we're at. While people keep talking all this bearish talk, and I don't know why they are, you're all from a record of what, 60 points or so? It's not very far in the Nasdaq. That's not much of a move. So you're up here. Does the market break through this low and start down again, or is it able to get up into the resistance? That's what we're going to look at on the weekly charts by the end of this week, and we'll be studying that. When we take a look at a daily area chart of closes on the Nasdaq, you're still under the down thrust. You've gone from 59.37.75. You had a break. You came back up a bit, and then you went back down. You're not through. This is going to be an important area on the market, or getting through this 57.94 could give us another wave of selling. So the market's not out of the woods, but it's looking pretty good on a closing basis. Now let's go to the bar chart and get a better feel for what we have. I think you can easily see the waves down that you had in the market. You got clearly the lower lows. You got highs that were lower than previous highs. When I put the swing line on, you get to see this in another way, and you can see the lower lows. You can see the lower highs. That's bearish. The next thing I put on a chart is I like to know where the 18-day moving average of closes is. I consider that the neutral point, the line in the sand. And you take a look at what this market did today, and I think it's pretty clear that the market rallied back to it and just held right there as it's trying to figure out the next move in the market. So the trend is down. The bias of the market, because of where you're going to close, is over that number. The two negate each other. In terms of where the market fell to, the lower Bollinger Band has been offering levels of support. You weren't deep enough in a break to get down to the 100-day average, but the strength of the market was strong enough to carry you back up here. And remember, on these black lines, the idea behind them is the market will trade within them 95% of the time. So when the market gets under them, as it did here, or over them in other situations like you did up here, these are areas that I think the pros are taking off longs when you hit this spot there, shorts there. Yeah, you can get aberrations where the market runs with it, and that often happens when you get a trend like this. But that's often accompanied by momentum indicators going down or up. What you have now is a market that coming into today, let me show you, you had an oversold condition. The reading was 24. I interpret oversold on slow stochastics, any reading under 30. I interpret overbought anything over 70. So as long as I have one of the numbers under 24, it's an oversold condition. Yesterday you came to the Bollinger Band, you held it, and today you rallied back up to that 18-day average looking for what to do next. I call this chart pretty neutral at this point. In the S&P, let's go back to Friday, and that's Monday. Let's go to Monday. Market makes a break low, makes a run for the 100-day average and the Bollinger Band. Just misses the 100-day average by 2 points, basically. The market's oversold as can be. Today you get more of a rally. You know what I'm going to tell you. Look for tonight, resistance to be up at that 18-day average of closes. Now let's assume the market continues to rally. Let's assume it gets over 2474. In that case, you have a lower low and a higher high. It is still not trending. Let's go back to the Nasdaq. Let's assume this market, which we've got the lower lows, takes out 59, I don't even know what that number is. It's right here. It's going to be 59.49.5, okay? You'd still have a lower low and a higher high. You wouldn't be trending again, and you'd be coming into resistance up at the upper Bollinger Band. If you get over 24.74 in the S&P, well, you got enough room for a good trade, but you're still not in a trend. And that's what bothers me right here. When we come to the Dow, you've got a higher high. This arrow there is higher than that. You got a lower low. The market's gone from the upper Bollinger Band to the lower Bollinger Band, but on the way it stopped at the 18-day average, and guess what you're doing again? You're stopping at that 18-day average. This is very indicative of a market that's spinning its wheels, unable to break out to the upside, unable to break out to the downside. And gee, August 22nd, coming to the end of the month. We've got the Jackson Hole Symposium coming up, a lot of Fed speakers. Congress isn't back in session yet. I think it all makes a little sense. The president tonight's going to give one of his grandiose speeches in Phoenix, where he was invited by the mayor not to attend. In other words, please don't come to Phoenix, Mr. President. Didn't matter. He's going to be there. And the market is spinning itself right now, trying to figure out what to do with that. One of the lead indicators has been the Russell. It led this breakdown. It has still got a bearish crossover in play, where the setup on moving averages are bearish. It is a market that if it opens higher, it can lose the embedded reading. And if it did so, guess the target number that might be in its sight. You got it. The 18-day average of closes. I'm not saying it's going there. I'm saying it's what it could do. It is still an embedded reading. This has been the most bearish of all the indices. And if it loses that bearishness, it's like we pulled on a rubber band and let go of it. This is going to be the resistance area, a target. Doesn't mean I'm right that it gets there, but I know where the target is from my point of view. When we come to the VIX, a couple of things. Momentum turning down. The market's now got a pattern of lower highs and lower lows. Where did the market stop? Just like I pointed here, that if the market rallies up, it'll be resistance, the 100-day average 18. You tell me where the first stopping spot was right here, and I'll live with what I said. That's your first support. But the trend is down. The bias is down because you're under the 18-day average. You hit your first support leg. If it lets go from here, you could be making a run to 793. But I got to tell you, that's a hard number to get to. And you're going to say, why? What's 10% of where you're at right now of 1135, 135 points? Wouldn't you agree that's a big move intraday? Even that number won't get you to 793. You got to break because of how low you are in value. 20, 25%, nah, it's too much to expect. I'm not saying don't expect it, or I'm really not saying it can't happen. I am saying I don't expect it in one swoop. When we come to TLT, the popular ETF for this play, the market's got the embedded reading. It's got 3 days in a row. This day, both numbers are over 80. We can look at it easier here. Day before over 80, the day before. So you have an embedded reading. It would not surprise me to see this lose that reading. Why? After this run-up to the upper Bollinger Band going into Jackson Hole, maybe traders are going to take money off the table. Given that the trend was up, if you take money off the table, I'd say the market could fall back from there. When I take a look at the T-bond market, both numbers today are over 80. See that? Let's go the day before. Both numbers over 80 and the day before. It too is embedded. It will take very little to get it down. I am not bearish. But I'm like an airplane pilot. Before the trade goes on, I'm looking to see how easy will it be to lose that reading. It'll be easy. So you just put out your horns and you understand what you've got in your hand. I don't like that the 10-year notes refuse to embed. They're just staying very overbought. They could easily back off to the 100-day average to, if you will, gather themselves in front of the FOMC. I keep saying FOMC, in front of the symposium. It's because the Kansas City Fed holds the meeting. The dollar index negated its downtrend but did not start an uptrend. And that sort of fits in with what's happened in momentum. It's gone flat. You have lower highs, lower lows. That's a downtrend. The market today closes over the 18-day average. That's upside bias. The two counter each other, and momentum has gone flat on you. In the euro, it's the opposite, but exact flip-flop. The market is in an uptrend on the swing line, but it closes under the 18-day average. And its momentum, it might actually be pointing more down than up, in my opinion. When we come to the Aussie dollar, you've been in an uptrend, but it just hasn't had the momentum to make a run to that upper Bollinger Band, and suddenly it's stalling right here. So you recognize those things and you try to figure out what to do. But the question that I would ask currency traders is, why would you put yourself in new positions in harm's way in front of this symposium where God knows what's going to be said? I expect it to end up with a lot of nothing. I doubt that Ms. Yellen's going to come out super, super hawkish. I expect her to be a hawk, but no more so than she's been. I would expect that Mario Draghi, when he looks at his euro currency, isn't going to come out and try to drive the market up. I think he's going to be more dovish in his talk. But they're both going to be close to the chest. They're going to be watching. No one's expecting, in terms of majority, the Fed to do much of anything at its September meeting, but Mr. Draghi might announce something, and that's still the wild card. Although he said already that he has no intent of doing a new monetary policy announcement at this symposium. We have higher highs, higher lows. I believe we do. So the yen's still in an uptrend. If the market backs off here, 91.09 could be the support zone in the market. Now, in the crude oil, we saw the API numbers. They came out with a 3.6 million barrel decline. I'm doing this from memory. They had 9 million last week, so okay, still a decline. The problem is there was another build in gasoline and another build in distillates. I'm going to repeat it over and over. Why are you buying crude oil if you're just stockpiling those products? So problem for that market. I think the market's going to be under some pressure, especially if in the morning we get an EIA number that is similar. When we look at the gasoline chart, we have a pattern of now higher lows, higher highs. However, while the trend is up on the swing line, the bias is down because you're under the 18-day average. Momentum has gone flat, and you actually get a sell signal if the market takes out this 148.50 area, because then you could end up with lower highs, lower lows, and the next objective could be the lower Bollinger Band. So that and the 100-day average come into play. Last in the nat gas. The slightly cooler weather, I couldn't believe what I was reading, is what traders are attributing to this run-up, that there was demand because of the cooler weather. Okay, it's only August 22nd. How cool can it get? But if that's the case, fine. The trend is clearly up. Higher lows, higher highs. The bias is up. The market's over the 18-day average of closes. You're knocking on the door of being overbought, because I consider any reading over 70 as overbought. But support back here at 288.40, take out 286.70. This attempt at a rally will fail. What else are you seeing on the chart that I think it bears you're looking at? The market has not been able to hit the upper Bollinger Bands. It keeps falling short, but it's able to hit the lower bands over and over. So there's still a downside bias, as I want to call it, to the overall thrust to the downside. I want to remind you all, I teach trading. We spend a lot of time here as a boutique firm, and what I did is I created a video course that's online for you to learn my techniques. Now, what you're seeing here, believe me, is the surface. You're not inside of what the course does. Window envelopes, you never see me talk about them here. You're going to get a lot of looking at inside, outside days, chart formation. You're going to see Bollinger Bands in a way you've not seen them before. I think you will. And you're going to get my write-ups. I do daily write-ups, and then to back up what you're going to learn in the video, each day I do a webinar, if you will, a video of 40 charts in the morning. Now, they're done in a certain way, so if you like stock indexes, they're first. If you like currencies, they're right after that. You can move your, if you will, your player and get to wherever you want. The charting software alone is worth $99. The research that I give you for that during the course is $60 value. The whole course is $109.95. It's 6 hours of videos, all the software you need, and an understanding of what goes on. In addition, should you need to call me and ask me a question, I'm there. Starting in September, I'm going to have webinars again. And when I do those, you're invited in during the week to come in, ask questions, and I go through the markets with you. So I think you're going to like what you see there. It makes it a lot of fun because there's interplay. You can bring up, even if it's a stock symbol, I will go through it because to me a chart is a chart. One of the ways that I love to teach is take off the name of the chart. Why? If I mention gold, if you're bullish, you're always looking for the bull formation. I get away from that when I teach you in the course. So give us a call. You can go to our website under the word education. You'll see a fact sheet and everything about it. You can click up here as well. If you're watching me on YouTube, it'll take you right to that page. You can find out more, see all the questions that you've got about it. I think you'll find for $109.95 one of the better investments you can make. But again, that's my opinion. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.